Hello, everyone. My name is Igor Tomic, and I'm CEO at Dash Devs. And today we have a really interesting episode with Greg Palmer, who is the host and keynote speaker at Finovate. Many of you might heard about this conference, and if not, please go check out. That's something that I really like to take the part. So, hello, Greg. How are you?
Hey, Igor. I'm doing well. Thanks for having me.
Thanks. It's a big pleasure and big opportunity for me because we had the chances to talk and I even recorded the interview with you. But today it's a full-fledged episode and I really love to dive deep into the discussion, what is happening with the fintechs and how the modern technology is affecting it. So the topic is about people in fintech projects and startups and tier 1, tier 2 businesses. So the really first one that I can think is about the technology and real human need, because we see that AI is just jumping out of any window and any holes. Like everyone is talking about how AI is going to make a difference in engineering, in approaching the clients. So what is happening, Greg, here? How do you see that?
Yeah, well, I mean, it's an interesting question, right? Because artificial intelligence has gone from something that we've been talking about in terms of there's all this promise in the industry. There's so many cool things that we're going to be able to do. And now we're seeing it not only gain a lot of relevance and a lot of attention inside the fintech ecosystem, but more broadly. And if you look at the response that has been going on in some of these, consumer markets to artificial intelligence, it certainly hasn't always been positive. We're in a danger right now. And, fintech has always kind of had this danger, but it's especially acute right now. We're in danger of kind of building fintech for machines and forgetting about the humans who are behind those machines and recognizing that financial services is fundamentally a human services industry. And the more that we can create tools that make people's lives better, the more people want to use those tools, the more powerful those tools become. Right now, there's so much focus on artificial intelligence and kind of making things ready for AI and using AI and kind of recreating these human interactions that there's a real danger we could almost skip right past these human interactions. So the companies that I see who are using AI really intelligently are doing it to make humans stronger, to make humans better, to kind of take care of some of the things that humans struggle with, repetitive data entry, things where humans are likely to make a mistake. AI can do these things no problem. When you look at, your customers engaging with AI as a first line of communication, that's where you have to be really careful because you can go so far down this road of creating an authentic human interaction or an authentic feeling human interaction, but people are more concerned right now about who they're talking to. Am I talking to a real person on the phone? Is the commercial that I'm seeing made by human beings or is it AI? Is the video that's on my Instagram feed real or is this just another AI spoof? And there's this growing backlash to some of these AI pieces. And so that's the real danger. And it all comes back to this feeling that, it really is the human beings at the center of all of this. Those human beings need to not only find the technology useful, but they need to feel good about using it. They need to feel like it's helping them. And so that's where you can have this potential for a disconnect. And I worry right now that some of the fintechs who are using AI are being a little too aggressive in kind of automating things which should still be done by humans, especially when it comes to that kind of emotional, behavioral side of things.
This potential threat and challenge is not a new one because I feel, and we discussed it before, like a lot of people in fintechs, especially if they didn't have an experience in financial services, they assuming that the technology can fix or bring something really new to the financial sector. And one of the question is, do we see that technical founders or the fintech founders who believe in strong tech, they gain in the success? Because it might be the case with AI when we put in the reasons for using the technology in behind the business value or the customer value. So is it happening just with AI or it was before?
Well, it's always been an issue in fintech. Certainly before AI, a lot of people build technologies in fintech for technologists or because they have, knowledge of some sort of hole or an inefficiency in a system somewhere. And so they go and then build something which plugs that hole or makes that inefficiency a little bit smoother. And this has always been a place where fintech startups can get tripped up because you have people who really understand the technological side. But at the end of the day, the people who are going to actually buy that technology, whether it's a banking executive or whether it's direct to consumer, those are human beings making those decisions. And so there's always been this pitfall that's been out there where you could be really good on the technical side, but if you aren't able to communicate with the humans about who needs your technology or what you're able to do, this is where you can have really good technology dying on the vine, so to speak. And I've seen this happen over and over again. I've seen great solutions that haven't found the traction that they deserve because in those critical moments, sometimes their founders struggle to communicate with the people on the other end of the table. Here's why you need this. Here's what's going to benefit you. Here's what's going to benefit your customers. And this is still true today. As much as AI is prevalent all over the place, it's still human beings who make these decisions, right? Humans control the purse strings. If you're going to get into any financial institution around the world and get your technology adopted by them, it's going to be the result of a human interaction where you sit across from somebody from that company and say, hey, we can help you. And they say, yes, you can. Come on in. And that conversation is still incredibly important. And this is an area where fintechs have always struggled. And at the same time, there are companies who have done this very well, of course, but it's something that a lot of founders don't necessarily think about as they're creating their companies and creating their technologies. It's a really critical piece to be thinking about early on in the process, because without that human buy-in, without being able to stand across from somebody and convince them, here's why you need to use us, you're never going to have the adoption that you need in order to kind of really kickstart into that, from the startup stage up into this growth stage.
That gives me a lot of thoughts about like the last 15 years in fintechs, because I've been in those moments when everything skyrocketed in the digital banks. And it might be this example, because the reason why certain fintechs are successful in having millions of the customers nowadays, because they rethought and put a little bit of more approach as a customer-centric for the mobile application. Because my thinking is that sometimes banks, they just trying to go with a similar silo, similar approach, and digital banks gave this more human-driven approach. But it's no longer the question, because everyone having modern mobile applications, and we have a lot of tools which are already existing on the market. So what do you think is important? Like if you're founding a fintech startup right now, like the human aspect is clear. What else you think should be in thoughts and understanding of someone who's founding the startup in 2026?
Yeah, well, certainly, first and foremost, you need to have the technology where it needs to be, right? That's just one of those things which underpins the entire process. So making sure that your technology is effective and that it's really adding value is obviously kind of table stakes. You have to be in that position. I think beyond that, a big mistake that I see companies make, especially when they come to a show like Finovate, they think, well, I'm just going to get up in front of this room. I'm going to show my technology. Everybody in the audience is going to understand how amazing my technology is, and they'll come to me. They'll come and see the value that I can provide, and I don't need to go out and really work to go and interact with them. And this is really one of those critical mistakes, because the companies that I've seen who've gone on to do really impressive things have come to Finovate not only with good technology, but with a really good strategy in terms of how they wanted to go and engage the people in the room, who their targets were, who they wanted to go and meet. And in many cases, this requires bringing a lot of people to the event so that you have time to meet all of the different folks who are in those rooms. And this is this is kind of following along on that human-centric side of it, but this is not necessarily a skill set that coders have. And I'm not to say, I don't want to pigeonhole anybody. There's absolutely people who are technologists who are excellent speakers, and I've seen, many of them over the course of my career. But in a lot of cases, the person who's building the product is not necessarily the person who should be out there publicly speaking about the product. And that's difficult, especially if you're a founder and a CEO. You think, well, this is my baby. I want to be the one who's up there advocating for this and talking about this, even if that's not your skill set. And so I think one of the things that I really encourage founders to do, especially early on, is to think about who we want to communicate to, think about what message we want to communicate to them. And in many cases, this involves bringing in somebody else, either hiring a person who can look at messaging or getting some messaging consulting or things along these lines. The companies who undertake those steps are better positioned in these critical moments where you have somebody across from you who a really strong potential target. If you have gone through some messaging coaching, if you understand what your selling points are, if you've given a lot of thought to that side of it, you're going to be much better equipped to tackle those critical conversations when they arise. So that's something which I think every founder should be doing early stage, not only thinking, how can I make this technology as good as possible, but how can I think about communicating this to other people? And if I need to bring in some help, I should get that help, because this is one thing that's so critical. You really can't afford to have anything fall by the wayside there. These opportunities don't come along very often to talk to the right people. When you get that opportunity, you really have to be able to take the most of it.
And it rings the bell, because I used to be an engineer, and I know that sometimes creating it doesn't mean building the bridge to the customers who are going to use. So that's a really good takeaway that I really love, because meaning you need to understand the customers who are struggling with the specific issues and the way how this issue can be addressed with your product. It should be the special people, or at least someone who has a really good understanding who is the target audience. How do they think? How do they see the things? And how you can send the message that actually that's the product that you need. It's not just about having the product, because having the product is just 5-10%. People are underestimating the technical budget. It's not just what you need, because a lot of effort should be put into marketing, into the communication. And usually the technical budget is like 5-15% at max.
No, absolutely. And I think this is, again, one of those pieces which is easy to overlook. And if you take a step back and think about it from the other side, if you put yourself in the position of a financial institution executive, very few of those people have technology backgrounds, right? They don't look at the world necessarily through that technologist lens. They look at the world, in some cases, a much starker lens, which is simply, money in versus money out. How can I grow? How can I make sure that my financial institution survives over the next several years? How can we get more customers in, more creditors, more debitors, all of these kind of things which make a bank tick. And so, looking at it from that standpoint, they're not usually as concerned about how the technology works as they are about what it can do. And that's a difficult step. A lot of people come to Finovate, and I coach all the companies who come to Finovate. And when I first talk to some companies, they'll talk to me a lot about what their technology does, but not in the terms of how do you make somebody money, right? How do you save somebody money? When you get down to this really basic level, these are the things that financial institution executives care a lot about. And it's not something that fintech innovators are always good at talking about. And sometimes it can be awkward, right? To talk about things in that kind of really brazen sort of brass tacks way. But it is really critical for everybody to understand, hey, I'm going to make your CFO happy. If I, as a technologist, can make you happy, but your CFO isn't on board, we're not going to have a relationship. I need to make sure that the guy who's looking after your dollars and cents on your side is going to be happy as well, or else we're not going to move forward.
That's the level that I think sometimes in fintech, tech people are missing, because the assumption is that technology is something that the person needs, but we don't need those tools. Like if you need to hand the picture, you don't need the drill. You just need the picture to be in the right place. So that's really good takeaway. And another angle that I see, a lot of startups, they doing some value ideation, they do the proof of concept, and they have the rounds of investment, the seed round or the round A. Does it mean that the job is started? Because we discussed it before. So what is the journey then for the fintechs looks when they had the initial funding?
That's a really good question. And I think a lot of startups don't necessarily think beyond that point, right? Especially the people, the ones that are formed by younger folks who are sort of fresh out of college. You get into the startup lifestyle, you build something, and all of a sudden you get some venture capital attention. Maybe you get a seed round or a Series A, and all of a sudden you have this valuation, right? You get a Series A and they say, here's how much money we're giving you and this valuation. And all of a sudden there's a number attached to the value of your company. And this is a really difficult moment for a fintech startup, because having that number, let's say you got a $5 million Series A and somebody slaps a valuation of $150 million on you. That's awesome, right? It means that there's somebody who loves what you're doing, but at the same time, that money figure can really go to your head. And so you look at it and say, oh man, that's cool. I built this thing that's worth $150 million. Well, you haven't really yet, right? Somebody is giving you money with the idea that maybe you'll get to that point. But if you talk to venture capitalists, they give money to companies and don't necessarily expect all of those companies to pay off. In many cases, don't even expect a majority of those companies to pay off. So, I've talked to venture capitalists who say we have a 5 to 10% hit rate, meaning 5 to 10% of the companies that we invest in will go on to become something really huge. That's not something that fintech founders feel. When you think, I've got this $150 million valuation, what the VC is saying is, we think there's maybe a 10% chance you'll get to that valuation. And so we're putting this money into you because if it pays off, it's really going to pay off for us. What a founder might hear is, we've already done it. We've already made it. And so this is a moment where discipline is really key. Understanding why you need that funding, what you're going to do with that funding, and how you're going to use that funding intelligently to go from where you are now to where the VC thinks you might be able to get to is a really critical component. And I've seen people who kind of get this funding and think, oh man, we're rich. And they start, getting the fancy offices or things like that, flying all over the world first class. The ones who are most likely to make it to that next level are the ones who really look at that money and think, okay, how can I use this intelligently? How can I make sure that I'm hiring the right people, that I'm scaling up in the right ways, that I'm spending this money as efficiently as I can, with the promise of I can take this and turn it into something down the road. So that's, I think, a really critical piece. And a lot of founders struggle at that moment. And so the more you can kind of see that coming, recognize this is really just the start of our journey. We've got somebody who wants to take a chance on us. Let's take the most of that chance. And let's make sure that we're in that top 10%, because that's really the line that you want to get across. Once you get funding, I would encourage every founder to think, okay, now I need to make myself that top 10% of companies who got funding to really ensure that I get that next round, that I can continue to grow and ultimately get to the point where you can actually say, okay, now we've made it. Now we've got that really big valuation and we now have some metrics to back it up. We have customers, we have revenue. Those types of figures are going to be really critically important down the road. It's not time to celebrate yet. Don't go, sure, pop a champagne bottle or two, enjoy a night, but then get down to work the next day and really look at, taking it and pushing off from there.
When you get in the round, it's time to double down, because it means that right now you kind of have a loan to prove your business model and prove commercially that business is sustainable. Sometimes I heard like the saying that startup, it's a reverse business idea, because first you get in the money and then you're trying to build the business model. So it's a, once again, really good takeaway, because it's just the beginning of the journey. And with each round, you need to double down or even triple down, because there are a lot of companies who are also having the VC-backed money, and they put in them instead of like just flying around and doing the stuff which is not adding the value to the end customer. They doing this 24/7, and that might be your competitor. So you need to double down on that. That's really great. And another angle which I wanted, and I have kind of an experience myself, because we built the digital bank in the United Kingdom, and it was released in January 2019. And the tech was good. We had customers, but I always had a feeling that we were late to the market for 2-3 years, because we didn't survive the competition to Monzo, Revolut, Starling. They've been already there. And when you're trying to convince someone to jump from one digital bank to another one, they already had those options. They already have been on the market. So the question is, we have the tech, we have the business model, we have an understanding of how to convince the customers. But there anything that maybe is about the timing and market gatekeepers that are already existing?
Yeah, well, I mean, it's certainly something which I've seen quite a bit of as well. As you can probably imagine, there is absolutely an element of luck here, an element of timing here. A good solution too soon can struggle to get attention. A good solution too late can be drowned out by competitors, even if what you have is better than what those more established competitors are doing. In some cases, it's still really difficult to get the attention that you need from the industry to say, hey, we are actually doing something different and unique from what these other people are doing. And so that timing factor is really critical. And this is one where, there's so many different factors that go into play. And especially you think about these things that nobody sees coming, these big shocks to the ecosystem, like the pandemic in 2020. There's certainly things like that which can come from nowhere. I saw a lot of companies in the pandemic who really struggled because their business models were based on kind of bringing people together. I saw companies who found the pandemic to be a massive boon for them. All of a sudden, everybody's going digital. We need a way to get our bank in front of our customers digitally, and there's people who can provide that. So there are certain companies that I know of who in June of 2020 could not hire people quickly enough to keep up with the demand. All this to say that, I think it's difficult sometimes to accept that there's a little bit of luck here and that you can do everything right and still not have the result that you want. That doesn't mean that you made a mistake somewhere. That doesn't mean that you had a problem. It just means that there are factors outside of your control that could conspire against you. I think one of the things that's really important for founders to be thinking about is, get your head up out of your own little bubble and look around the ecosystem and say, is somebody else doing this? Is somebody else making more noise about doing this? And then you can think about it from the other side. Where's the need? What do my potential customers really need? The companies that are more in tune with what their customers are thinking and how those needs can shift, because they can shift very quickly in some cases. If you're able to stay on top of that and kind of anticipate, something is happening in the market, I think my customers are going to start needing this, I'm going to build this before they start asking for it so that I'm ready for that need. Those are the companies that tend to be in a position to do really well. But it's so difficult to anticipate what your customers' needs might be, especially when those needs can change at the drop of a hat. As much as possible, try and get ahead of that, try and anticipate that. But you have to accept the fact that there's not always something that you can do, which is regrettable, but it's kind of the reality of the industry.
One item that I've seen, I really like to talk and discuss it with you. People are assuming that you need to build really good end-to-end product. And sometimes it takes ages. Like you need the funding for that, you need a decent team, and then you have iterations for trying and failing. So I feel like in 2026, it changed a lot. We see the vibe coding, we have the tools, we have quite a lot of people compared, to 10 years ago, because right now you can build almost any business model on top of the vendors. And 10 years ago, researching the core banking or even KYC was kind of limited expedition because there are not so many names out there. Does it mean that right now, in one way, it's harder to kind of find the niche, but another way, it's cheaper and much more easier to find out if your business model or your assumptions are working on the market?
Yeah, well, there's certainly pros and cons to it, right? I think on the pro side, there's a lot of ability that you have. A lot of people set up sandboxes that you can go and play. You can validate some of these ideas in a more safe environment and get a chance to play with anonymized data or things like that can give you a really strong sense of, are we on the right track? On the flip side, there's kind of this idea that, well, if I build this thing, how much is it gate kept? Can somebody else come in and recreate something very similar to this with, using AI coders, using vibe code, things like this? And so that's one of those things we're still kind of in this moment where we have to wait and see. We have to see exactly what that does to the industry. 10 years ago, there were a handful of extremely excellent coders in the space, and people knew who they were, right? They're celebrity coders. You can say, if I have this guy on my team, we're going to build something awesome because he's a wizard at this. There's still people who are excellent, but now there's maybe more of an opportunity to kind of create something without having one of those superstar coders. And there's a leveling effect for that. That means that, people can build things which would have been really difficult for them to build before. And I think what this is going to do is really place a lot of emphasis on not what you built, but where are you pointing what you built. The people who are looking at the biggest problems that they can solve are going to have an easier time of kind of solving those problems and creating the code that you need because of all these tools and all these advancements in AI. But at the same time, you still have to have that idea of, I see somebody struggling with this, so I'm going to go right at it. I'm going to build a product that makes, this specific compliance pain a little bit less painful, or that really dives into this question of why are people leaving my financial institution? Again, a lot of these answers are kind of human-centric answers, and it takes a human to kind of pick and choose. This is the area that I want to focus on. So it's going to be a really exciting time because I think that a lot of the barriers to creating good technologies are going to go away. We still have to figure out where we can point those technologies. And that's going to be the really critical component. We'll have to see. I'm very excited to see what happens over the next couple of years, but I think the quality of innovations that we're going to see is going to kind of keep ticking up. And ultimately, the people who will benefit from that are the customers on the ground, the people who are using these financial services products. And I don't know that they necessarily appreciate that all the time, but I think they will start to feel some of those new solutions coming for them. And this is one of those things where all of a sudden you get an update from your financial institution, you have a new app and there's some new functionality in there and you think, oh, this is actually really cool. This is making my life better. I think consumers are going to see more of that kind of stuff over the next couple of years because it's going to be easier to bring some of those pieces to market.
I think I can compare the ability to innovate right now with the change from assembler and machine codes into the high-level languages, because before that was quite limited and really bright a group of people who were coding in machine codes, but the change into C-level languages actually enabled a lot of things that we appreciate right now, like operating systems, macOS built on a Unix system, etc., etc. So maybe we're just in the beginning of another era where we will have much bigger number of people working with the technology, which didn't have the ability before because the entry level was higher. But another way it gives with the quality or quantity, it gives an ability to test the quality. So instead of one solution, we will have 20, but those who out of those 20 will nail it from the product perspective, they will be much more successful and will have a larger customer base maybe. When you were describing the situation, it kind of brought me back to the item number one. If you are building customer-centric solution, it doesn't matter which technology you're using. Is it AI? Is it like a pure vanilla engineering efforts? If you know what exactly you are solving, and that's the real need from the customers, that's definitely true. We going back to the customer-first vision, like in commercial reality, because another struggle that I personally have, like you have some experience and you worked in the industry you saw, and you kind of assuming that the same struggle and same needs exist, but the market is pacing. Like if you take a look, maybe even 5 years ago, the crypto and stable coins were not even there where we have right now. Right now we have Genius Act, we have stable coins from here and there. Stripe is promoting Bridge, JP Morgan is issuing deposit token, Swift is announcing blockchain networks. How to keep up with all those changes from the market? Because you might have the assumption that you know the need, but it's already might be expired and not valid for the customer. So how to do that?
It's a really good question. And I think this is a huge challenge. And I don't know that there's kind of an easy solution to this. I tend to fall into the camp, and there are people who disagree with me on this. I should preface this by saying that, but I tend to fall into the camp that, if you look at a lot of the kind of basic needs that somebody has from a financial services provider, those needs fundamentally haven't changed over the course of the last, let's say like 80 years, maybe even 100 years, right? I, as a consumer, I need somebody who can store my money, help me grow it. I need somebody who can help me move money from place to place, whether that's me paying to an individual or to a company in the form of a credit card transaction. Now we've kind of taken those credit card transactions, we've gotten rid of the plastic. I can tap my phone to it. I look at these stable coins and central bank digital currencies, and you think, okay, those are useful, but why do you need them? What can you do with those? And I think ultimately ultimately a lot of it boils down to, there's sometimes this froth at the top of the fintech industry. There's things that we are really excited about. There's churn, there's some cool stuff happening, there's new capabilities. But if you get down below that froth, the water below is still relatively calm and relatively stable. And so this is one of those areas where I think in some cases, looking at the fundamentals is really critical. And I think people look at the role of a bank and what a bank should be doing for themselves and for their communities. I think that there's some financial institutions who've gotten away from that, right? Who have moved outside of what you would consider to be kind of basic banking service. So if you think back to, and this is a deep cut, but if you think back to in the Sound of Music, we're talking to a banker. There's a scene with the banker. He says, I take the money that you give me and I loaned it to a baker down the road so that he can build up a business. And when he pays me back, I give you some money back, right? This sort of archaic, maybe simplistic view of banking, where we take money from people and then use it to build businesses in their local communities. A lot of that has gone by the wayside. I think there's going to be, and we're starting to see it, there's people who are looking at, I want to actually keep my money local. I want to bank local. I don't care as much about the technology side as I do about what happens to my money after I invest it with somebody, where it goes. Look at it through that lens. These technologies become less important, right? Some of these things at the top, do I need a stable coin in order to execute some of those basic banking functions? Potentially, right? But that's not necessarily going to be the end. The stable coin is not the end. It's a means to an end. And it all comes back to what is that end? And at a very fundamental level, banks exist to profit off of credit. That's really what they do. They take money, they loan it, they get more money back than they put in, hopefully, or else they go by the wayside. Keep yourself focused on those kind of really basics, those fundamentals. I think the easier it is to identify which aspects of this churny stuff on top, this frothy stuff, these new technologies, which are undoubtedly exciting, but you can really look at them through that lens. Which ones do I need to be engaging with? Which ones can I afford to wait and see? There's a really good example in 2015 maybe. We had a company who got up on stage at Finovate who said, blockchain technology is amazing. I can build you your own blockchain for your company. You can have it do whatever you want. And he didn't get a response, because people in the audience were like, well, what do I need a blockchain for? Technologically, it was amazing. It was really cool. And it was some of the most advanced tech that I've seen on the stage. But because there was nothing that bankers immediately saw, I'm going to use that for this, they felt like they could just ignore it. And now you look at a lot of stablecoins, which are doing some of the same things that he would have talked about 10 years ago. But now the use case has been validated. And now people can see, okay, here's a reason for me to engage. So it's, again, this kind of, you need people who are pushing the industry forward. You need people who are looking from a purely technological standpoint of what can we do? What is possible? How can I build these new cool things? You also need people who say, where are we going to point these things? What is actually useful here? Because sometimes there's technology that's cool, but doesn't actually have function. Sometimes there's technology that's really functional, but not very cool. And you have to kind of find this blend. And so it's difficult. It's really difficult, especially in these moments where there's so much activity happening in so many different places where you can have your head turned and think, oh, look at that, look at that, look at that. Especially at a show like Finovate, we see 50 to 60 companies sometimes on stage, and they all have cool technology to show. It's really difficult to say, okay, what do I want to focus on? What's the biggest one or two problems that I want to try to tackle this year? And I have to sort of let everything else go by the wayside for the moment, at least, until I can really look at what is my biggest priority. So we'll have to see, right? Again, there's a lot of interesting things happening. We'll see what kind of stands the test of time. And, 10 years from now, what are we going to be talking about? Which of these technologies are we still going to be thinking, oh, this really added a lot of value. This was a game changer. And which ones are going to be oh, that was really cool, but didn't ultimately have the legs to stick around and add the value that we would have liked to see.
That gives a lot of hope, because when you describe bank locally and this ability, it kind of rings the bell, because in the end of the day, no one is thinking like, what do I do with the technology? For one, I'm thinking how it helps me to buy the things, how to care about the community and the people around me. So it gives a lot of hopes that we will have this rethinking and reflecting. Do we do the technology for the technology, or we really know how the financial cases will be solved? But another angle that I would like to approach, basically in fintechs, fairly, we can split in two buckets. One, the companies who are doing B2B business. So they, as you said, like blockchain, we're giving you the blockchain for the bank. Okay, it doesn't sound like the consumer approach, and the B2B sales are totally different and convincing different. But I really admire the company who are going after the B2C market. And do you see the changes in B2C in terms of what are the expectations from the end customers? Because people are getting more educated. I remember, and I rewatched the iPhone presentation. It's a special moment when Jobs was explaining how to use scrolling, like this effect with the ribbon and everything. And it feels like everyone right now, even 3-year-old kid, can grasp the context and understand how the technology works, even without explaining. is this changing the expectation from the audience and B2C customers because they have quite a lot of experience interacting with the digital products? Is it getting harder, and what it takes to become a really B2C successful company?
Yeah, well, and certainly, you're not wrong about the younger generation. I have fingerprints on my computer screen right now from when my 8-year-old was looking at something and he just reached in to pinch it. And I'm like, no, this isn't a pinch screen. Could not understand the idea. Like, why wouldn't it be a pinch screen? What's a mouse? Like, what am I going to do with this? I don't want to move this thing around. So I completely see where you're coming from there. Direct to consumer has always been really difficult in the financial services space because there are so many established powers in whatever country you're in, whatever regulatory environment you're in. There are people at the upper echelons who have a lot of control over which companies, which products can come to market, which products can get attention. And it's really difficult to get that consumer trust early on, to be able to say, hey, we've built something new. We're a new brand. You haven't heard of us, but you can trust us with your investments or with your savings. We're not going to lose it for you. And there's an element of security that people have when they think about old established brands. And there are banks which have been around for, over 100 years that are still around today. And it's difficult to come in and say, I'm going to do something better than, what Wells Fargo or Citi or, US Bank or Barclays or any of these older brands can do, because they have this customer trust already. They have this track record of saying, we've been around for 100 years and, we know how to take care of our customers. We're solid, we're steady. And in the financial services space, solid and steady plays. I mean, that's something which people really want. We think, I want my money. If you imagine, a physical where you want your money, you want like a big hard vault, right? You want a safe door with multiple layers of metal. I don't need new and flashy. I need steady and secure, guarded and safe. When companies go direct to consumer, they really have a lot of work to do to validate themselves and to say, you can trust us. But at the same time, you look at the companies that have done a really good job of this. There's digital banks who've gone and, cut huge chunk out of some of these more established financial institutions' market shares. That's something which I think we'll continue to see. There's also players like Square, which allow you to do something which you couldn't do before. Anybody, when Square first launched, the idea that you could take a credit card payment from your phone with this little plug-in, anybody could become a small business. This is a really big idea. You don't have to go through some of these powers. You can kind of shortcut some of this. Same thing with Venmo, right? Another company that goes direct to consumer, which, looks and say, you don't have to do a bank-to-bank transfer. We don't have to get credit card fees involved here. You don't have to write a paper check. I can just text you money. Some of these ideas are good enough and solve enough of a real world problem that they can instantly and inherently get some of the customer attention that they need. Other ones are more difficult. A company that comes to mind is eToro in the investment space. When eToro was launching, there were so many different providers of investment advice and the ability to trade stocks, and they weren't as easy as quick as eToro was. But eToro had a really strong challenge ahead of themselves to go out and say, you can trust us. If you give us the opportunity to make these trades for you, we'll be able to make these trades for you. Not only can we do what the other service providers can do, but we can actually do it better and faster. It took them an enormous amount of time and energy to build up that trust. And it was a massive marketing campaign. This is something where, you still see eToro on soccer fields, football fields around the world, right? There's a huge amount of brand building that goes into it. So not only does the technology need to be there, but that communication side of it, where you can communicate out to the customers and say, this is how we can give you something that you don't have. And again, you can trust us. You have to really think about that side of it. It's very difficult to go direct to consumer as a fintech company. And so many of the companies that initially try will end up pivoting and looking at, can I partner with a bank who can then, move me into different markets that I can't get into? Or do I just give up on the direct to consumer piece and sell to banks directly instead of B2C? Maybe I want to go B2B to C, which is a really common play as well. I hope that we're not done with seeing direct to consumer fintechs, because I think that those are some of the ones that offer the most value. But we do see that it's a challenging road, and it takes a lot of time and effort and a lot of marketing spend in order to kind of get the attention that you need in order to be successful.
That's true. And I think I cannot stress enough what is the difference between fintechs and other industry. There is a definitely medical industry, but if we talk about the social networks, digital products for, leisure and just maybe even games, the cost of the error, it's just some page doesn't load or you didn't get a message from someone. But the cost of an error in financial industry is huge, because you will be fined by the regulator, you will lose someone money. And it cannot happen. You cannot have the second time first impression here. You need to be in really good shape in terms of the technology, in terms of regulations, because one small mistake might lead to the fines, might lead to the license issues, etc., etc. So that's a really good point. That's why I think going into the B2C market is really hard, but it pays off if you nailed it. And certain companies definitely did it well. And the digital banks like Nubank and Revolut, they're showing that there is a still big space for innovation from the technology's perspective, but also from the financial perspective, because they kind of enabled the things that people wanted, not just because they have a tech or a new shiny mobile application. So I think it's a really good one. And since we're approaching the end of the episode, I would like you to answer for the question that I didn't ask, because we discussed a lot. I think you have a lot of experience and knowledge. You want to address something that I didn't ask today.
Well, I think, the biggest thing that we didn't address is that, it kind of hinted around this, but it takes a lot of hustle. And, this is a word which has a lot of different meanings, but the idea that once you have the technology, you really need to go get in front of the right people and work to have conversations and network and build up these relationships. This is a full-time job in and of itself. It's potentially many people full-time job. A lot of the companies that I've seen who've gone on to differentiate themselves from their competitors didn't necessarily beat them on better technology or necessarily even better messaging, but they beat them on the hustle side of it. Where if you come to an event like Finovate, there are certain companies who would come and have 2 people. There are certain companies who would come and have 15 people. A company that comes to mind here is MX, formerly Money Desktop. When they came to Finovate, you knew that they were in the room because you could see those people everywhere. They were friendly, they were engaging, they were having conversations and just doing a really good job of interacting, pulling people in a very friendly, congenial way, but saying, nobody is going to leave this room without knowing who we are and what we do. And it's especially critical for someone like MX who needs to really work closely with all different sides of the industry, the financial institutions and the fintechs and everywhere in between. But that hustle is a really critical component, and it's something which doesn't come naturally to everybody. So that's one that I think, again, you have to be really honest with yourself as a founder. Do I have this? And if I don't have this, can I bring somebody else in? Can I get somebody who's going to be that energetic, enthusiastic person who, when it's their 50th conversation of the day, they're still smiling, they're still happy, they're still, treating the other person like it's their first conversation of the day. They're still fresh, they're excited to be there. That's something which I struggle with sometimes. I mean, certainly if you catch me at the end of a day on Finovate, you'll sometimes see, it's a little bit difficult to keep those conversations going when you have been talking all day. But the people who do that well, the companies who do that well, absolutely have an advantage. And again, this comes back to that human interaction side. Being able to make the 50th person you talk to feel special, feel heard, feel unique is a skill. And it's something which is critical and can be the difference between success and failure.
It's pretty insightful because people still do business with people. It's not AI agents, it's not robots. So we need the community, we need the approach and engagement and this feel that you need it and that you are talking to the real person who is interested in you and having this proper professional conversation. So thank you so much. It was really good conversation. I had a lot of personal takeaways that I think we will use in some other areas. So thank you for your experience and your wisdom. Thank you for joining today.
My pleasure. Thank you for having me on. And for anybody who's interested in checking us out, Finovate Spring is our next one. We'll be in San Diego in May. Finovate Fall is our New York show, which will be in September. We're still taking applications for demo companies at both of those events. There's time to get involved as an attendee. So if you're hearing this and thinking you want to become a part of that community, we are a great spot to find the right people for you. Check us out, finovate.com. And again, Igor, thank you so much for having me on.
And personally, I would add, as a company, we've been to a lot of Finovates in the United States and in London. So I really strongly suggest, if you haven't been, please visit, please take a look what is going on in the industry and do the networking, meet the really cool people of the industry who are there. Thank you, Greg, for organizing Finovate and taking the part in this podcast.
Yeah, my pleasure. Take care.